Last week, markets ended on a positive note after ECB gave stimulus and there were reports of improvement in US-China relations. Today, however, markets in Asia have given mixed signals and Indian markets have opened with a decline, where Sensex have fallen more than 200 points and Nifty also went below 11,000 after an attack on Saudi oil field. As due to attack, there was a decline of more than 5 million barrels per day by Saudi, and this has created kind of a knee-jerk reaction in the market. Besides this, markets will be eyeing on Fed meeting, where it is expected that Fed will reduce the rates by 25 basis points. Although Donald Trump is asking Fed for rate cuts, but given that US-China relations are improving and economic data of US showed mixed signals as their retail sales were good, there may not be aggressive rate cuts and there are also chances of no rate cuts. Trump is constantly charging Fed chairman, calling him enemy, bonehead. In fact, Trump wants zero or negative interest rate for the US so that America can refinance its debt, but there are political issues and Powell also doesn't seem to be in favor of it. So if there will be rate cuts, probability of aggressive rate cuts is less likely. There are already voices in the Fed that do not believe there is a need for rate cut. So Powell is facing a very difficult situation. At one point, market expects rate cuts. Trump is making him punching bag and some of his own partners are against it. He is walking on a small rope. Let's see what his move will be. Moreover, markets won't be just eyeing on his actions, but also his future stance. As last time it was stated that Fed reduced the rates, but due to current situations and not due to ongoing cycle of rate cuts. Fed last time clearly indicated that this rate cut is not the beginning of rate cycle. So markets are clearly looking what will be the stance and action this time. This week, Bank of Japan will have its meeting and we can expect rate cuts from Japan as the GDP of Japan rose by just 0.3% quarter on quarter in recent data which came on 8th September 2019. With such a slow growth in third largest economy of the world, it is expected that Bank of Japan will come up with new stimulus package to improve the condition of economy. According to the poll conducted by Reuters, 33 out of 41 economists believed that there will be expansionary policy by the central bank. Besides growing economy, Japan is also expected to reduce the rate so it can prevent its currency from rising. If Japan do not reduce interest rates but US follow the trend by ECB which reduced the rates last week, then due to comparatively higher rate in Japan, its currency will improve as more investors will pour money in the country. Now, with the appreciation of currency, the Japanese products will become more expensive in the international markets, and that will reduce their demand which can impact the exports of Japan. However, current interest rate of Japan is minus 0.1% and reducing it further into the negative territory will also have its negative consequences. So this will also be factored in by the Bank of Japan when it will take the decision. Besides this, there are other events markets will keep eye on. Economic data from US like industrial production, Chinese industrial production, Japan's balance of trade, housing data like existing home sales for US, house price index of China, WPI from India, all this will also be kept eye on. China's industrial production data was released in the morning and it grew by mere 4.4%, which is reported to be the lowest in 17 years. US-China trade relations are improving as tariffs are being delayed, products are being exempted from the list. In fact, politically sensitive products like agriculture products are also being exempted. Now experts consider these as baby steps, but can we not say that these are steps and it shows that instead of escalation, things are going in opposite direction? If there will be more signs of improvement, then markets will take it as a good sign and they will rise. On domestic front, there will be eye on GST meeting where important decisions can be taken like relief for the sectors which are facing trouble. Sectors like automobile, FMCG are being victim of slowdown and they have raised the voice for decreasing the rates for their sector to revive. This might happen, but with slowing economy due to slowing economy, the income from direct taxes is already expected to remain short of targets. So reducing the GST rates might also impact the GST tax collection, which further can impact the fiscal deficit of India. Last week, booster package was given for exports and housing sector, but there was a new default in NBFC as LTCO was unable to meet its interest obligations. However, Indian markets were positive last week, but today they opened with a negative run. Rupee at one point went above 72, but last week it ended below 71. However, today in the morning it opened with a fall due to increase in oil prices, as India is one of the biggest importer of oil and meet most of its requirement by import. That's why rise in oil price led to the fall in rupee. In fact, for few days there was also net inflow in FPIs in month of September, and in month of September FPIs are the net buyers with total infusion of 1,841 crore by FPIs. This week, rupee will also be impacted by actions of central bank of other currencies, as rate cuts by those currencies will impact their own currency, as fall in rates will lead to fall in their currencies, as low interest rates will prevent investors from depositing money in those currencies, and due to that, rupee might see increase in the value. Now let's talk about the oil. Brent is up by 10% and WTI is also up by more than 9%, as drone strike on oil field by Saudi Arabia disrupted almost 50% of oil supply from Saudi. Crude oil last week had quite a week, up, down, it witnessed a lot. Hope of improvement in trade relations between Iran and US. OPEC meeting, monthly output report from OPEC, but fear of weak demand weighed heavy as week ended due to negative sign. And this, in fact, even on a weekend, it was quite busy. There was attack on Abuek plant by drones. Abuek is operated by Saudi oil company Aramco, and on Saturday morning there was series of strike by drones, as almost 10 drones attack, and it has disrupted more than around 5.7 million barrels per day of production by Saudi. So this attack is claimed by Yemen's Houthi rebel, but according to the US, attack may also be done by Iran. So hopes of renewed talks between US and Iran seem to have taken a U-turn, and at the same time it has also increased the tension in the Gulf area. Trump has stated that US is locked and loaded, and Trump also added that he will use emergency reserve of the country to bring this stability in the market. And once Trump said this statement, oil prices stabilized a bit and saw a bit of decline after they rose very sharply of 15% on the opening. As supply from Saudi is already affected by after attack, and chances of Iran sanctions getting lifted has also fallen after this, there will be impact on oil supply. Previously there was report of decline in demand, and now there is impact on supply. So this sudden impact of around 5.7 million barrels per day has drove the oil price above 10%. Now let's talk about the gold. Gold prices last week remained around 1500, and they closed below 1500 at 1496, but today in the morning they rose above 1510, as the actions by oil attack gave market uncertainty, and as a result they went towards the safe haven, which is gold, and due to which gold price rose more than $10 to go above 1510. In fact, gold prices will be actively eyeing on meeting of Bank of Japan, Bank of England and Fed. Mostly on Fed, as that will move the market most. Gold will have positive support in both the cases, even if Fed cut the rates or not. If they did cut the rates, then bond yields will fall, and in times of uncertainty, as it might happen in the future, people will move towards the other safe haven, which is gold. And in case if the rates are not reduced, then there will be more uncertainty and disappointment in the market. Investors will move away from stock markets and towards the gold. So due to both these reasons, there is a good chance of gold rising no matter the impact of Fed meeting. But there is also profit booking going on right now. So if that continues, then market can also decline a bit more. In the local market, it is expected that demand will start reviving by the next week. That's it for right now. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना ना भूलें।